We need to talk about the student loan delinquency debt crisis that is happening this month. If you're unaware, there are millions of student loan borrowers that haven't made a payment in over a year. And as of right now, they are potentially going to start garnishing wages from those in default in order to get those up to date and start making active payments. So we're going to talk a little bit about this from the US Department of Education's website, as well as implications this could have in the overall economy. If you're unaware, there are quite a few cracks that we need to be aware of. We have auto loan delinquency rates sky high. In fact, they are higher than the financial crisis. We have credit card debt at all-time highs, and consumers are tapped out. They are not being able to make payments on their credit card debt, on their car loans, and that could have larger implications in the overall economy. So we'll get into some student loan issues that are happening right now and that you need to be aware of. So this is directly from the US Department of Education. They are going to begin federal student loan collections and other actions to help borrowers get back into repayment. The collections are going to start May 5th. The US Department of Education today announced its Office of Federal Student Aid will resume collections of its defaulted federal student loan portfolio. On Monday, May 5th, the department has not collected on defaulted loans since March of 2020. Resuming collections protects taxpayers from shouldering the cost of federal student loans that borrowers willingly undertook to finance their post-secondary education. So they're claiming they want to start these collections, garnishing wages, in order to stop burdening the taxpayer of potentially paying off these defaulted loans where people have no intention of paying this debt at all. While Congress mandated that students and parent borrowers begin to repay their student loans in 2023, there was nothing that was really policing this, so people just chose to not pay a lot of this debt. So we'll get into some of the numbers right now. Today, 42.7 million borrowers owe more than $1.6 trillion in student debt. That is an unfathomable amount of money. And more than 5 million borrowers have not paid a monthly payment in over 360 days and sit in default, many for more than 7 years. 4 million borrowers are in late stage delinquency, that is 91 to 180 days. And as a result, there could be almost 10 million borrowers in default in a few months. So as of right now, there's 5 million people that haven't made a payment in 360 days, and an additional 5 million people that haven't made a payment in almost 180 days. And in a few months, this could get up to 10 million borrowers in default. That is in severe default. So in a year, they haven't made a single payment. So we could be on the brink of a student debt default crisis this year. Almost 25% of the federal student loan portfolio will be in default if we get to that 10 million number. Only 38% of borrowers are in repayment and current on their student loans. Most of the remaining borrowers are either delinquent on their payments in an interest-free forbearance program or in an interest-free deferment. A small percentage of borrowers are in a 6-month grace period or in school. So if you're in school, you don't have to pay off your student debt. Of course, there's a low chance that you're going to be able to secure a high-paying job in order to pay off that debt. And a lot of people get a 6-month grace period after they graduate. So currently, almost 1.9 million borrowers have been unable to even begin repayment because of a processing pause put in place by the previous administration. So a lot of this is sort of a snowball effect from allowing years of the forbearance program, not putting in any policing effects into people not paying off their debt, basically. And that's how we got into this situation where we have nearly 10 million people in just a few months who are severely delinquent in their student loan payments. Now, obviously, there are a lot of factors that people need to consider here. We are currently in an economy where it's some of the most unaffordable times we have ever lived in history. So a lot of people are taking out other loans in order to just survive, put food on their table. A lot of people have racked up significant credit card debt because they are in situations where income maybe hasn't kept up with their overall cost of living. So they've decided to say, hey, I'm taking on a lot of this other debt just to survive, just to put food on the table, look after my family. So I'm gonna put my student loan debt on the back burner. Since we're not really being mandated to pay this off, I'm just gonna put this to the side and I'll deal with it in the future. As of right now, I just need to focus on providing for my family, providing for myself, making sure I have a roof over my head. And as a result, the interest has continued to build on these student loans. They are not interest-free loans. So the longer you take to pay off this debt, the more debt you end up having to repay. Now, this isn't a lesson on borrowing money. This is just to say that a lot of people haven't made a single payment in over a year, and that payment is now going to be even higher than it was a year ago. So if they're gonna start garnishing wages for these individuals who haven't made a payment in over a year, this is going to severely impact the overall consumer and a lot of consumer spending that happens in the economy. People are going to be reluctant to go out shopping, to go on trips, to travel, if they all of a sudden are getting wages removed from their salaries to pay off student debt. So here we go, involuntary collections for defaulted borrowers. We'll restart the Treasury offset program administered by the U.S. Department of Treasury. On Monday, all borrowers in default will receive email communications over the next 2 weeks, making them aware of these developments and urging them to contact the default resolution group to make monthly payment, enroll in an income-driven repayment plan, or sign up for loan rehabilitation. The department will also authorize guarantee agencies that may begin involuntary collection activities on loans under the Federal Family Education Loan Program. Collection activities are required under the Higher Education Act and conducted only after student and parent borrowers have been provided sufficient notice and opportunity to repay their loans under the law. So if you don't take any action on repaying your student debt, they're basically saying they're going to have no choice but to start garnishing wages in order to get that debt paid off. So these are implications that will affect the overall economy if people start getting their wages garnished. And I want to briefly discuss delinquency rate on consumer loans from every single bank in the country, as this has been rising. So in 2021 and Q1 of 2022, we were around 1.6% loan delinquency rate. And going all the way back to how this data was being tracked, that was a record low. And now we are at 2.75%. So we've almost doubled what we were at 2-3 years ago. And if this continues going up, which at this rate it kind of looks like it's going to, we could potentially be heading for a consumer crisis where the overall consumer has way too much debt in order to keep shopping, to keep buying, to keep spending more money, which could spiral us into a larger recession than we are probably already heading for. So at the beginning of 2008, we were at 3.5%, but in 2005, we were at 2.7%. And if you're unaware, the financial crisis actually happened in 2007. It just wasn't announced until 2008. And in 2007, we were at 2.9%, which is not far off the levels we are right now. So what's your takeaway from all of this data? Well, in my opinion, we are heading into an environment where you're not going to see house prices appreciating 15-20% year over year. In fact, we are probably going to have a couple negative years. Now, in my opinion, areas where the top 10% are buying will probably still be fine as they are sitting on a record amount of cash. But areas where people are buying 3.5% down, 0 down, 5% down, low down payments, you're probably going to have more foreclosures leading into the next couple years. So what should you be doing in this scenario? I think this is an economy where you need to be conserving your wealth. Don't go get a new car payment. Don't go on trips you can't afford. If you're going to be buying a house, make sure you have a larger down payment, because if we have a 10-15% correction and you're putting 5% down, 3.5% down, you're going to be underwater on your mortgage, and very few loan options can be refinanced if you're underwater on your mortgage. Now, if we do go into a recession, chances are we will have significant interest rate cuts in order to stimulate the economy, which will help significantly with all of these high debt balances from consumers. So there are pros and cons, obviously. If we go into a recession, you'll see the unemployment rate skyrocketing. You'll likely see the stock market have an even larger crash. And all of this is kind of coming to fruition, especially if wages are starting to get garnished from people not paying off their student loans. I mean, you saw the numbers. In a few months, maybe even by the time you're watching this video, there'll be 10 million people who are in severe delinquency territory, meaning they haven't made a payment in over a year. So there are a lot of cracks in the economy that people need to be paying attention to. I don't think this is the environment where you need to be going out, spending money you don't have, taking on more debt. I think this is just an environment where you need to be cautious. Let me know your thoughts in the comments. If you like this video, subscribe for more, and I'll see you next time.